are hearing of a group today. Today is the very, very first time to hear of the word what here? A group. It's called a group of what here? A group of companies. A group of companies. A group of companies. Ladies and gentlemen, you can only be said to be in a group if you are related companies. So for example, we'll have your family, nuclear family, your nuclear family. If, for example, you have a father, you have a mother, you have, in this case, of course, other siblings, then this is a very well-knit group here. Yeah, a group of what here? Family members, nuclear family members. And the same, using the same illustration, ladies and gentlemen, also companies, we shall be having what we call a group. And the IFRS 10, we call this one here IFRS 10. IFRS 10 defines a group as a parent and its subsidiaries. A parent and its what here? A parent and its subsidiaries. So if you go to what we call International Financial Reporting Standards number 10, it tells us that a group, this family, will be constituted of what and what here? We shall be talking over a parent company and its subsidiaries. So we have here a parent company, and then we have what here? We have its subsidiaries. So whenever you look at the entire of this, it could be one subsidiary, it could be many subsidiaries. So this one is what we shall be calling what here, somebody? Is what we'll be calling a group of companies. A group of companies is what we'll be calling a group of companies. I have a handout for you. You will just allow me to make like just general discussions, and then you'll be able to get notes later. However, you can take like what we call a high level notes. And if you wish, you can actually come here and press AI. You know, we have the AI notes, AI summary notes in Zoom. If you look for the AI summary notes, actually they are much better. If you click there, then this Zoom meeting, the Zoom itself, will be able, in this case, to give you a very good summary, which you'll receive immediately at the end. Of what year? At the end, and those notes are much better because Zoom will refine them. It's artificial intelligence. Zoom will refine them. So what have we said about a group? What we've said, ladies and gentlemen, about a group is something very nice here. We'll never forget this. But we have here IFRS 10, which says that a group is constituted of a parent company and what here? And its subsidiaries. Yeah. To turn off AI companions? No, I'll decline because there are already people who have come up with this AI. So I can't turn off. All right. Now, ladies and gentlemen, please listen and listen to me very well. I'm repeating. We are saying here that a group equals who? A parent company and a subsidiary. Now, ladies and gentlemen, remember, a subsidiary is a company that is being controlled by a parent entity. A subsidiary is a parent company, or rather is a company, sorry, is a company that is controlled, by another company, known as the parent company, known as the parent company. So subsidiary is a company that is controlled by another company, known as what here? Known as a parent company. Then how do we define this control? Please listen. Ladies and gentlemen, if we have here company A, all right? Company A, in this case, here has got shareholding. So shareholding of more than 50% of A, for example, call that company A. So we have a company here that has a shareholding of more than 50% of A. then automatically A will be called a subsidiary. A will be known as a subsidiary because now we control it. A will be known as a subsidiary. So if we have our shareholding in company A, and this shareholding exceeds what year? 50%. Then automatically A will be known as what year? A subsidiary, because more than 50% signifies what year? More than 50% signifies control. More than 50% signifies control. Ladies and gentlemen, what if our shareholding, what if the shareholding in A or of A, the shareholding of A is exactly 50%, is exactly 50%, is exactly 50%, not more than 50%, not less than 50%, but it is exactly 50%. Then in this case here, A will be known as a joint venture. Will be known as who? Will be known as a joint venture. Will be known as a joint what here? Will be known as a joint venture. A joint venture. A joint venture. So anytime you hear of Mr. 50%, Mr. 50%, then you will automatically know that a company that we own exactly 50% of its shares, then that company becomes our joint venture. Becomes our joint venture. Now, what if in this case here the shareholding of A, the shareholding of A is greater than 20%, greater than 20%, but less than 50%, but less than 50%. Then this A here, A will be known as an associate. A will be known as what here? An associate. A will be known as an associate. A will be known as an associate. An associate. A will be known as an associate. A will be known as an associate. Ladies and gentlemen, if shareholding of A is less than 20%, then A will be known as a simple investment. A will be known as what here? A simple investment, or a financial instrument, or a financial instrument, or a financial instrument, or a financial instrument, or a financial instrument. I will be able to summarize this, ladies and gentlemen, in form of shareholdings, and status, in form of shareholdings, and the status in our books, So if more than 50%, then this must be a subsidiary. This must be a subsidiary. Exactly 50%. This must be a JV. A JV for joint venture. And then we have in this case here 20%, all the way in this case here to 49.9999, like that. All right. Then this automatically becomes what here? This becomes an associate. This becomes an associate here. And then we have here less than 20%, less than 20%. This will be an FI. FI for financial what here? For financial instrument. FI for financial instrument. So can I kindly get to know whether you guys have been able to take your little notes up to here? Have you guys been able to take your little notes up to here? Somehow? Have you been able to take your little notes up to here. Please go to your chat area. Go to your chat area. Go to your chat area, and then you respond. Go to your chat area, and then you respond. Go to your chat area, and then you respond. Aisha says yes. Great. Now, ladies and gentlemen, today I'm not looking at associates, I'm not looking at financial instruments, I'm not looking at joint venture. Today I'm going to simply zero in what we call IFRS 10. IFRS 10 is just about group accounts. And for group accounts, what are we looking at? We are looking at the parent company and what year? Its subsidiaries. Parent company and its subsidiaries. Now, please listen. This is very interesting because I'm so sure my students normally get 20/20 in group consolidation, because in group consolidation, all the marks are really low hanging. You'll be able to get all the marks by putting in very little efforts here, very little efforts here. Now listen and listen to me very well. What do we mean by the word consolidation? Consolidation. Whenever we hear the word consolidation, consolidation basically means putting together. Basically, you are summing. It is a summation. Mwalimu, what are you saying with this? To consolidate is to put together. How, for example, our great politicians will consolidate their voters' base. So they look at, for example, which regions are populous in terms of voters. So once we have like two individuals coming together, they are consolidating their efforts. So when we talk of group accounts, group, for example, group income statement, you shall take income statement of parent company plus income statement of subsidiary. IS stands for what year? Income statement. So you talk of group or consolidated income statement, you will take the income statement of the parent plus income statement of what year? Subsidiary company. Now, ladies and gentlemen, remember, according to IFRS 10, in this case here, the parent company and the subsidiary form a single economic unit. They form a single economic what year? Economic unit. Once we have realized we are controlling you, then automatically we shall be able to take, in this case, the parent and its subsidiary as a single economic unit. I mean, this is so important. If I were you, I would have highlighted this as a note, that a parent and a subsidiary, or even subsidiaries, they'll form what we call a single economic unit. They'll form a single economic unit. What does that mean? It means that if we have got transactions between them, if we have got any transactions between the parent and the subsidiary, then those transactions will be classified as internal and they'll be deemed fake. So in this case here, if a parent and a subsidiary transact within the period, an analysis within the period, such transactions will be deemed internal, and therefore will be cancelled from consolidated statements. from consolidated statements. So if parent and subsidiary companies here transact within the period, such transactions will be deemed internal or fake transactions, and therefore they will be cancelled from the consolidated statements. Ladies and gentlemen, remember we have just said that a subsidiary is really a close relative, is a relative of the parent, and that's why we are putting them in the same group. That's why we are putting them in the same what year? In the same group. Yeah, I'm recording from this side. You should not worry about recording. You will get this recording. So, ladies and gentlemen, I'm breaking up. Sorry. Are you guys having the same problem? Are you guys having the same problem, or is it only Francis? Are you guys having the same problem, or is it only Francis who has a problem? It's clear from David's side, it's clear. How about the other students? Please make mention there. Just Francis. Okay, it's clear. So Francis, maybe it's your internet. I'm really sorry. Yeah, maybe it's your internet. Now, ladies and gentlemen, I was trying to hammer a very serious point here. That a sub, listen even to this name, sub. Sub means what you're part of. So subsidiary is part of the parent. Why are we calling it part of the parent? It's because the parent is able to control the subsidiary. Why are we able to control the subsidiary? It's because of what you guys learn in company law. We normally call it force versus habitual. So for example, ladies and gentlemen, in Kenya here, must we vote for one individual 100% for that individual to become a president of Kenya? Must we vote for one individual 100%, all of us, for that individual, in this case, to become a president? No. It's 50% plus one. If more than 50% sit down and then they say it's William Ruto, then William Ruto becomes a president of Kenya, entire country. All right? So the same case here with this parent and subsidiary. The moment we own more than 50% of a company, then we'll be the ones to have a way in terms of how the subsidiary company is being run. We shall be able to appoint majority of the directors into that company. And if we appoint majority of the directors into that company, then the directors are going to make decisions. So really, it will be about what the parent wants. And that's why we are saying that a subsidiary and the parent are indeed one economic entity. So then if you're told that the parent sold goods to the subsidiary, the parent sold goods to the subsidiary, at the end of the year, any sale between the parent and subsidiary, either parent selling subsidiary or subsidiary selling to the parent, that sale is not genuine. That is just akin to how you yourself would transfer money from this pocket here and then you put it to this other pocket. This other pocket here cannot start, in this case here, celebrating that, hey, I've made a sale. No, we only get to celebrate whenever we make sales to third parties, not when we make sales, in this case here, internally. We make sales internally, that will not be a celebration. That kind of a sale will be fictitious. I don't know whether there is anybody here who is married. Do we have anybody in this case here who is married, or all of you are Gen Zs? Anybody who could be married by any chance? It's not wrong to be married. You should be proud of that, right? Anybody who is married? Anybody who is married? Problem with this class, guys, take long to respond. You would rather respond very fast and then you tell me, well, I'm single here, but we shall overcome. But still, I'll use that example of marriage. Thank you very much, Ma. So assuming, for example, it's then my wife. So my wife, in this case, and my children, those are my subsidiaries, right? Those are my subsidiaries, part of me. Those are my subsidiaries. So assuming, for example, I'm the owner of RCM, and my subsidiaries, that is my wife and my children, come to RCM to study. And then in this case here, we realize that they have paid fees. Will I start celebrating that, hey, RCM now has gotten really serious fees here from my family members? That money will be deemed to be what here? To be fair? To be fair. At the end of the day, when I'm consolidating my books of accounts, I have to say this income came from a very serious relative. Actually, even refund that relative that money. Refund that relative that money. All right. So we shall be looking at group consolidation from the context of family. From the context of family. From the context of family. And that is why when it is a subsidiary, then that sale is what here is fake. But what about, for example, if I was to sell goods to an associate? You see, an associate is not an immediate family member. An associate is like, for example, a cousin. So if I start giving everybody in my extended family goods for free, then I don't have business. So if the sale has been made, and we shall be seeing this later on when we touch on IAS 28, when we talk of joint ventures and associates, IAS 28, we shall be seeing that if a sale is made, in this case, to this distant relative, like an associate, like a financial instrument of sold goods, in this case here, then that automatically is a genuine sale. But sales within the group will always be taken to be what here? Fictitious. Will always be taken to be what here? Fake, and it shall be eliminated from our group accounts. I would rather end the class here, but I mean, ensure that everybody has understood this concept that sales within the group will always be taken to be what here? To be fictitious. And it shall always be done what here? Shall always be eliminated. Shall always be eliminated. Shall always be eliminated. Sorry, just a moment. Just a moment. Yeah, I'm blocking something. Yeah, shall always be eliminated. Now, ladies and gentlemen, please listen. It's not sales alone. Many things that are done within the group shall always be eliminated. Let me ask you a question. If, for example, my madam comes in the morning, she normally calls me Mwalimu, and she tells me, Mwalimu, please give me 20,000 Kenya shillings. I will refund this money. Assuming I have this money, give this money to this great lady, 20,000. Will I ever get that money back? Of course, you guys told me you're not married, most of you, but you must be knowing some things, all right? You must be knowing some things. Do you think this money that has been given to my dear wife here will ever come back to me? Yeah, I can see you guys, of course, you're not married, but you happen to be knowing these things. Great. That money will never come back. That money will never, to infinity, will never come back. Never come back. Why? Because this is family. And it's supposed to be like that. But unfortunately, the boy child, we are never lucky. What if I'm the one who borrowed this money from my madam? I tell my madam, give me 20,000. So first of all, before she gives me this money, I'm so sure, like, so many stories like Chama, etc. Of course, they are good. At the end of the day, they'll give me the money. But do you think I will also take it to infinity? Do you think I'll also take it to infinity without paying? The boy child? No, let's talk, somebody. Let's talk. Let's talk. We must be lively. Caroline, thank you. Caroline says, Mwalimu, that one you must pay. That one you must pay. That one you must pay. You must pay that on back. You must pay that on back. Which is against the rules of what a group consolidation. Ladies and gentlemen, under consolidation, my wife, my children, and myself shall be taken as a group, a single entity. Whatever we transact in between ourselves, it will be just like if you sell goods here to a subsidiary, it will be taken like just a transfer of goods between departments. Otherwise, that sale will never be taken to be what here, will never be taken to be what here, to be genuine. Those will be what here, they will be fake. They'll be fake. They'll be fake. They'll be fake. Now, ladies and gentlemen, there are things that I would need to be able to do this group consolidation very well. There are things that I would need. Most importantly, the thing that I would need, the tools of trade that I would need. Before I take you to our past papers, the tools I would need. I would need, in this case here, for example, a formula for getting profit margin. Is there anybody who is able to remind us this formula for getting profit margin? Anybody? Yeah, I have an obligation there. Anybody who is able to remember the formula of getting profit margin? Can somebody remind Mwalimu here? How do we get profit margin? Somebody remind Mwalimu here. How do we get profit margin? You must have had profit margin somewhere when you are doing your financial accounting. Mumbi, Aisha, David, yeah, Caroline. You must have heard about profit margin somewhere. Either in economics, quantitative analysis, or financial accounting. Is there someone who is able to remember the formula? Please, I'll remind you this formula and promise me that you'll never forget. Anytime they want me to give them profit margin, I'll always be taking here profit over sales. Profit over sales. Profit over sales. Profit over sales. And then we have in this case here what we call profit markup. Profit markup. We have what we call profit markup. So profit markup is profit over cost of sales. You can write that in full. And profit markup is profit over cost of who? Cost of sales. Have you guys written these, and have you guys been able to do what here to highlight this? Because these are my tools of trade. These are my tools of trade. My tools of trade, 2 of them, very important. Very important. Very important. These 2 are really important. Profit markup is profit over cost of sales. Now, as a gentleman, please listen. Later on, you will see us. You can actually even write it here as a note. Very, very important. We have what we call unrealized. Unrealized profit on stocks, which we shall be abbreviating as UPS. Unrealized profits on stocks, UPS, will always be obtained by us taking profit margin times reason. Profit margin times reason. Profit margin times reason. Profit margin times reason. Yeah. Profit margin times reason. Reason. So this RIS stands for remaining intra-sales. This stands for remaining intra-sales. This stands for remaining intra-sales. Remaining intra-sales. Remaining intra-sales. I will be able to describe what this unrealized profits on stock is later. But now what will happen? You see here we need the profit margin. But in this case here, that bad examiner who is wishing you failure, who is not wishing you success, instead of giving you profit margin here, they will give you profit markup. So for example, they'll tell you profit markup is 1/5. And then I'll be required to change profit markup to profit margin. So if profit markup is 1/5, can a great ninja here give me the profit margin? Can a great ninja give me the profit margin? Just guesswork before I tell you what the profit margin will be. If profit markup 2 is 1/5, what will be the profit margin? 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 You know, I normally buy all my students, in this case here, dinner. One of the finest are called Nairobi, to buy you dinner. You guys are excellent. The only problem is you don't like talking to me. Thank you so much. I can see you guys have given me very good guest answers, which is very, very good. So remember, Mumbi, that the numerator never changes. The numerator never changes for both of them. The numerator never changes. What changes is the denominator. Mwanafunzi mmoja, huyu mwanafunzi sio alikuwa anafikiria nini? Akaniambia, unajua nini mwalimu, ati mimi nimecram sana. Ati profit margin inakuwa na makalio kubwa. Ati profit makalio in denominator. ati inakuwa na makalio kubwa. Sio ilikuwa inamaanisha nini? Kia niambie mbona nikashika hata mimi kitu fulani. Ati profit margin ati inakuwa na makalio kubwa. Nimetoa 6 wapi jameni? Nimetoa 6 wapi jameni? Nimetoa 6 wapi jameni? It's because of this. If you remember very well, you were told, ladies and gentlemen, that if you have your profit markup is profit over cost of sales, if this is A and the cost of sales is B and the cost of sales is B, then to get profit margin, you will take A over this B, but now you add A because margin has a bigger denominator, but A will always remain the same. And you see, in this case here, A is 1, B is 5. So in the denominator, I'll have a B plus A. So 5 plus 1. 5 plus 1 gives me what here, somebody? That gives me 6. So profit margin will be 1 over 6. Profit margin, will be, you will be able to see this in your past papers. All your past papers, group consolidation, this examiner wants you to fail, will always give you the profit makapu. But now whenever you're given the profit makapu, you should be able to know how to change it to profit what year? Margin. You should be able to know how to change it to profit margin. Profit margin. Let me repeat this, ladies and gentlemen, so that everybody will be able to understand. So that everybody will be able to understand, ladies and gentlemen, what if, for example, you are given here profit markup? You are given here profit markup is 3/4. What do you think in this case here will be the fraction of profit margin? Bila kuogopa, sasa tukikosea, so what? We are here to learn. Yeah, Ruben, thank you very much. We are here to learn. So if profit markup is 3/4. Yeah, I will remain silent a little bit. Jeff, I like your answer, not right, but I like your answer. Jeff, una mess tu kidogo tu. Kumbuka numerator ni same. Whether it is the profit margin or a profit markup, the numerator will be the same. But margin, iko na makalio kubwa. Margin kuna kuadd. Yeah, margin kuna kuadd. Margin kuna kuadd. So sijui kama Jeff umeona, I love students who are bold, who are able to give me the answers whether they are right or wrong. I really, really like that. All right. So remember, if this is your A and this is your B, then to be able to get profit margin, you will take in this case here 3, 4 plus A which is 3, the profit here. So this will be 3 over what here? 3 over 7. This will be 3 over 7. So these are very, very important tools. These are very, very important tools. Very, very important tools. Profit markup, very, very important. Profit margin, very, very important. Very, very important. Now, the other tool that I would really pray that everybody understands, what they will do, they'll come and they give you 2 companies, company A, company B. They will give you sales. They'll give you sales. They'll tell you this is 100 and this is 80. They will give you cost of sales. They'll tell you this is 20. They'll tell you this is 30. They'll come and they give you, of course, gross profit. Gross profit, of course, this, if you subtract, gross profit here will be 80 and this will be 50. They will give you that. And then they'll come and give you expenses. They'll come and give you expenses. They'll tell you this is 35. They'll tell you this is 25. So when you subtract like that, this will be 45. This will be 25. 25 like that. Net profit. Assuming no taxes. So we have our net profit there. So then they will come and tell us, ladies and gentlemen, that, all right, they will come here and tell us, in this case here, that these are the income statements, period ending, 31st December 2023. Like that. Then additional information. They'll tell you that A acquired 80% of shares of B on 1st of March 2023. On 1st of March 2023. That's point number one. A acquired 80% of shares of B on 1st of March 2023. Not number one. It's not number one. And then note number two, they will tell you that during the year, B sold goods worth 3 to A. Our figures are in millions, so let that also be just 3 like that. So during the year, B sold goods worth 3 to A. Full stop. By the end of the year, A had sold 40% of the goods it bought from B. Full stop. They are told, ladies and gentlemen, here that profit markup is 30%. Profit markup is 30%. Profit markup is 30%. Then we are required to prepare a consolidated income statement. So we are required to prepare a consolidated income statement, Please let me know once you guys are able to write this exact question. So prepare a consolidated income statement for the period ending 31st December 2023. For the period ending 31st December 2023. Let me know once you are able to write this simple question, which now will be able to take us to our past papers. I worked as a consultant, group consolidation consultant for a company called Arrow, which basically produces, which has developed a group consolidation software that is being used by Equity Bank, KCB Bank, EAPL. In Kenya here, I mean, most of the bigger corporations which have groups, which have subsidiaries here, all right? They use Arrow. You can go and Google the Arrow group consolidation software to consolidate their financial statements. All right, that's how I was a manager there. I mean, managing in this case here operations in 140 countries. Like that's why I got very good exposure. Group consolidation. That's what I get of a past paper. Me across all their group at IFR, advanced financial reporting, etc. I teach group consolidate and group cash flows. And I take maximum with your support. 2 or 3 lessons, I'm done with the group totally. So long as you're also chap in terms of giving me answers here in the chat box, And let's get to discuss. I'm not the very best. I also learn from my students. In this case here, every other day, I learn from my students. So after Arrow, I went to another different company, also dealing with group consolidation. So I do group consolidation on the IFRSs every day. That's what I do, IFRSs, etc. every day. So once you finish writing this, please put thumbs up. Put your thumbs up or say Y for yes. Say Y for yes for me to move ahead with something very, very important. Yeah, now I can see hope. Great. Thank you so much. Great. Yeah. Now, ladies and gentlemen, how do I solve this question then? To solve this question, first of all, I have to do what we call a group structure. Hapo ndio naanzianga. Hii ndio step number 1. You must draw a group structure. So you're told A acquired who? Acquired shares of B. How many shares? 80%. 80%. So, ladies and gentlemen, 80% are too many shares. Once you have 80%, then automatically it's like you have everything of B. You have everything of B. So 80% is more than what here? 80% is more than 50%. 80% is more than 50%, and therefore B is a what? B is a what to A? Who is B 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 to A? Because you're now controlling it. Who is B to A? Can somebody tell me? Who is a subsidiary? We shall be calling it a sub. Therefore, B is a sub. B is a subsidiary. It's a subsidiary. B is a subsidiary. And then, ladies and gentlemen, there is something very, very important that we must speak right away from. We are not the only owners. We're not the only owners of B. We just have control. Ourselves, in this case here, we have B being our subsidiary. A is the parent. A is the parent. But there is another owner who is going to be called the NCI. And this NCI owns what here? Owns, in this case here, 100% minus what we own. So this guy owns 20%. Because we own 80% and the company is 100%. So 100% minus 80%, that gives me 20%. So 20% is owned by somebody different that we shall be calling the non-controlling interests. We shall be calling this guy non-controlling, the one who has non-controlling interest, the minority shareholder. The minority shareholder has 20%. The minority shareholder has 20%. The minority shareholder has 20%. Up to here, my good students, are we together about this group structure? Because you must tell us the group. You must give us the component of the group. You will have, in this case, a subsidiary and other components, for example. So here in the group, we only have one company, which happens to be what here? Which happens to be a subsidiary. Thank you so much. Which happens to be a subsidiary. Which happens to be a subsidiary. Now, still within this group structure, you must give us DOA and the DOF. You must give us DOA and the DOF. So you must come and give us DOA, and then you give us what we call DOF. DOA is the date of acquisition. You write this in full. DOA is the date of acquisition. The date of acquisition. When was this B company acquired? The B company was acquired on 1st of March 2023. 2023. DOA, you're writing there that DOA stands for date of acquisition. When did the acquisition take place? 1st of March 2023. And then we have DOF. DOF is the date of financial statements. The date of the financial statements is given here. It is 31st December 2023. 31st December 2023. So, ladies and gentlemen, you can see here, acquisition happened within the year. It is a 2023 year, and acquisition happened within the year. So then you must come and give me the last thing here, called the famous norm. An exam is right like that. The examiner should be able to know what that stands for. So norm stands for number of months. The number of months the subsidiary was ours in the year. The number of months the subsidiary was ours in the year, because this subsidiary wasn't ours a whole year, for 12 months for sure. This subsidiary was ours for a few months. So is there someone who is able to count this number of months very, very fast? From when we acquired the subsidiary to the end of the financial statements, the date of the financial statements. DOF stands for date of financial statements. NOM stands for number of months. Number of months. Number of months. So in this case here, we have hope. Yeah. Normally, with my experience, very many ladies do not know how to count months. And if you're able to count here, you'll see. Very few ladies will ever get the number of months of this subsidiary in the year correct. Very few. All gentlemen will get this right, but 80% of the ladies will be wrong. You will see. Not that they are stupid, but I know. I've never understood why, but most ladies will be wrong. We shall be able to count. So don't fear, don't fear. You just give me, then we shall be able to count, and then prove me wrong. Prove me wrong. So remember, we are counting from the beginning of March. This is not end of March. So March is included. So the only months which are not included here are January and February. January and February are the only months which are outside. Then that means that we stayed with this subsidiary for how many months? You can also count from March, April. You can count like that. You see that this subsidiary was ours in the period for how many months? For 10 months. For 10 months. Is there any lady who got 10 months correctly? Is there any lady you guys have access to? Is there any lady who got 10 months correctly? Mwalimu natuonea. Tutaendelea mbele utaona tuko nasema hivyo. Tukienda mbele utaona kwa nasema hivyo. Unaona kwa nasema hivyo. Hakuna hakuna kuonea wanafunzi. Hakuna kuonea wanafunzi. Uta understand kwa nini mwalimu anasema namna hiyo. So in this case here we have this. Most of these guys got right. Actually, it's one gentleman. It's one gentleman. Jeff alipata wrong. Jeff, now you are let down. Jeff, you are the first gentleman. I'm account months vibaya. We shall overcome. We shall overcome. We shall overcome. Now, the gentlemen, once then you have been able to do this, the next step will be for you. Don't read any other additional information. Don't read any other additional information. You come and give us the consolidated income statement. So you give us the title of the parent, it's A group. You call a group by the parent name. So it's A group. Consolidated income statement. Consolidated income statement. Consolidated income statement. Write it in full. Consolidated income statement. Consolidated income statement. So we start consolidations. Remember, in consolidations, we are basically summing, we are simply adding things together. In consolidations, we are simply adding things together. So we start with sales. So remember, you are giving us the consolidated sales. So then I'll take the one of the parent plus the one of the subsidiary. But now remember, this subsidiary was ours for how many months in the period? For only 10 months. Remember, what you have here, 80, is for a whole year. But remember, we can only recognize our portion. Our portion. Remember, we traded with a B for only 10 months. Don't take up your calculator yet, no. Don't take up your calculator yet, no. So come here, ladies and gentlemen, and give us, in this case here, cost of sales. Let's consolidate cost of sales. So we have 20 plus this 30 times 10 over 12. Leave it like that. Leave some space for gross profit. Leave some space for gross profit. And then, ladies and gentlemen, you will come down here, and write expenses, and the expenses, you shall also consolidate them. You shall consolidate them. So come and pick your expenses, 35 plus 25 times 10 over what here? 10 over 12. Please don't pick your calculator because I will be doing some what here? I'll be doing some adjustments. So I would want to know whether you guys have been able to write up to here. And please feel free to ask me questions. I like when students ask me questions. I get to learn a lot. Otherwise, if the class ends without you asking me any question, I will not come out of this class being more wise. I want to become a wiser person. Now, ladies and gentlemen, from there we shall ask ourselves a simple question. This A and B now, they are a single economic entity. We are calling actually it the A group. We're not calling it AB. No, it's A group. You're putting everything under A. Then we ask ourselves, Do we have any intra-sales? It's either internal sales or intra. Intra means internal. Do we have any internal sales? Do we have any intra-sales? Do we have any internal sales? How much? If we have internal sales, how much? How much are you able to see during the year we sold goods? Worth how much here, somebody? What 3? So if there is any intra-sale, then the policy is that any intra-sale must be struck off the group sales and the group cost of sales. So you come in this case to the group sales, you say -3, and then you say -3. So from the group sales, you say -3. That internal sale has to be cancelled from the group sales. It must also be cancelled from the cost of sales. So now somebody will wonder, why are we cancelling these 3 from the cost of sales? Why are we deducting these 3 from the cost of sales? It's because of this. You see, B is saying I sold goods. So B booked these 3 as a sale, but A booked it as a purchase. And where do we normally get purchases, my good students? Purchases is normally under cost of sales. Because under cost of sales, you normally say opening stock plus purchases minus closing stock. So purchases is normally under what year? Under cost of sales. You don't have to really know most of those stuff into those details. The most important thing that you're supposed to appreciate, ladies and gentlemen, is that whenever there is an inter-sales, the first item that I will do, whenever there is an internal sale, I will subtract the internal sale. I will subtract the internal sale from the group sales when I'm doing my consolidations, and from the group what year? Cost of sales. That's step number 1. Step number 2. Step number 2, my good students. Whenever we talk about intra-sales, there will also be something else that we must compute. Whenever there is an intra-sale, there must be something that we shall be computing. There will be something that we shall be computing. Whenever there is an intra-sale, how I wish all of us were speaking the same mother tongue, because I would have told you this in my own mother tongue. But of course, you can as well write it in your own mother tongue, despite the fact that all of us are speaking different mother tongues. That whenever there is an intra-sale, we must calculate UPS. Whenever there is an intra-sale, we must calculate UPS. UPS is unrealized profits on stock. Unrealized profits on stock. UPS. So whenever there is an intra-sale, we must calculate UPS. And how do we get UPS? To get UPS, ladies and gentlemen, this is normally what I do. To get UPS, ladies and gentlemen, normally I take profit margin. I take the profit margin times the remaining intra-sales. You have to write this in full. We normally take profit margin times remaining intra-sales. Yeah, a good question there, ladies and gentlemen. Does time matter in intra-sale before or after acquisition of the subsidiary? That's a very good question, Elizabeth. Remember, we are doing our income statement for the year 2023. So anything that happened before 2023 will not come here. Anything that happens after 2023 will not come here. All right. So we are only concerned with the sales that happened in 2023. So if you're told in this case here, and you're going to see this kind of questions that there is a sale that happened before acquisition. That sale, we can never bring it here because it's not part of this 100, not part of this 80. All right, because you know, if it's an income statement, this 100 is just for the year. Which year? 2023. 2023. So Elizabeth, I mean, you are ahead of Mwalimu here. We shall be able to encounter that. We'll be told that there were sales in this case here before the acquisition period. We can't bring that one anywhere. But we shall be able to see that. Thank you very much for asking that question. So anytime they want us to give them unrealized profit on stock, then I'll be taking profit margin times the remaining intra sales. But now this fella has given me profit markup. Is there somebody who is able to see the profit markup given in the question? What percentage? What is the profit markup? He has given me profit markup. He has given me profit markup in this simple illustration, 30%. He has given me profit markup. He has given me profit markup. He has told me that profit markup is 30%, which is the same as 30 over 100. This, of course, will cancel out 0. So profit markup basically is 3 over 10. Then what do you think will be our, because we need profit margin? We need profit margin. What do you think in this case here will our profit margin be? Somebody talk to me tonight. Yeah, it is 30 over 130 or 3 over 13 or 3 over 13, isn't it? One and the same. One and the same. Thank you very much. It is 3 over 13. Then in this case, ladies and gentlemen, I will come and take here my 3 over 13 times the remaining stock out of this internal sale. Remember, you are the guys who told me that the internal sale is 3. The internal sale is 3. But remember, by the end of the year, A was able to sell some of those goods to third parties. And when they sold some of those goods to third parties, the profit was realized out of them. We are only concerned with goods that we sold to the group member. And by the end of the year, we find those goods were within the group. You see, when B was selling to A, it must have sold these goods at a profit. Listen, when B was selling to A, it must have sold those goods at a profit. Sold the goods at a profit to a son. If the son is able to sell those goods to outside there, third parties there, well and good, then we realize. But if it happens that the son is still having some remaining internal sold goods, then we're going to have some profit that the group has not realized. So remember, by the end of the year, we are told that A was able to sell 40% of these internal sales. So meaning that the remaining percentage was 60%. So it will be 3 over 13 times 3 times 60%. Quite an ugly figure. I'll just request that you give me, I'll request you give it to me in 2 decimal places. 2 decimal places will suffice. Please remember, we are talking of remaining percentage. 40% is what A had managed to sell. What is the remaining percentage? What is the remaining percentage? If they sell 40%, then in the company, within the group, we are left with 60%. We are left with 60%. So then the final answer, according to Mombi, the final answer is supposed to be 1.8. It's supposed to be 1.8. So I'm waiting to get an answer from the other ninjas. I'm waiting to get an answer from the other ninjas. And realize profit on stock that was sold in between the group, 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 stock that was sold in between the group. It's only Mombi who has given me an answer. I don't know why the other ninjas don't want to give me an answer, or even to confirm what Mombi has given me. Aisha 13, 3.13, okay. So most of them are giving me 0.42. Most of them are giving me. Remember, Aisha, we're only doing this 3 over 13 times the internal sale, which is 3, times 0.6. So 60% is the same as 0.6. 60% is the same as what here? 0.6. So times 0.6, which in this case, as somebody is telling me, is 0.42. I would really wish if Aisha, you can get this 0.42, and then you confirm to me that you have gotten it. Aisha, just check whether you can get that 0.42, and then you confirm. I'm so sure you must have lost it when you never took 0.6. I'm so sure that's why you lost it. Now you are okay. Thank you very much. Now, whenever you get remaining intra-sales, which has been able to give you, multiplied with profit margin, you've been able to get unrealized profit on stock. This UPS, you normally do two things with it. Two things. You add it to group cost of sales. Add it to group cost of sales, less it from group inventory in the balance sheet. Group inventory, my friends are not very nice. I'll improve on this tomorrow. Less from group inventory, less from group inventory, less from group inventory in the balance sheet or the statement of financial position. So in this cost of sales group, because of consolidated, please come and add 0.42. So anytime we get UPS, and I'm repeating here, and I would want you really, I'll be giving you the rationale behind that. But I always like my students in this case here memorizing. There are group consolidation steps I would want you guys to memorize. At times, memorizing things makes you move much faster. Like the person who told me that UPS, whenever you get UPS, always add it to group cost of sales, less it in the group inventory. Why do you less it from the group inventory? Because group inventory it has profits in it. And remember, according to IS2, not unless you're told otherwise, according to IS2, inventory should always be measured at cost. So unless you're told the value is very down. Otherwise, inventory is supposed to be measured at cost. You should never have a profit in it. Never should you put a profit in it. So if there is any profit there, then from the group inventory, which now is overstated, you need to go and subtract it. So subtract it, you less it from group inventory, which is a statement of financial position. But you always add it to group what year? Cost of sales. And I will be able to explain. I'll be able to explain. Yeah, UPS in full is unrealized profits on stock. We met this before, you remember, maybe I shall not join us. This UPS is unrealized. Unrealized, I like students who ask questions. I like really students who ask questions because I know we're going places with them. So UPS stands for unrealized. Unrealized profit on inventory or on stock. On stock. Or stock like that. Why are you adding this thing to group cost of sales? I'll give you the rationale behind it. But I would want us moving forward, we must take this as a chorus. You must take this as a chorus. We must memorize this. 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 It will be very important for us to memorize this. Very, very important for us to memorize this. Now, how do we get our cost of sales? To get cost of sales, we normally take opening stock. We add purchases. Add purchases. We less closing stock. We less closing stock like that to get cost of sales. That's how we get it. Now, assuming this is 10, this is 100, and maybe this is 20. Then my cost of sales here will be 110 minus 20. 110 minus 20 is 90. Like that is the cost of sales. Now, please listen. Please listen. What if instead of this being 20, what if this closing stock was erroneously overstated? What if in this case here, this closing stock was erroneously put in as 30? If it was put in as 30, meaning that we have an error of 10. Error of 10, the difference there is 10. If it was put in as 30, then this automatically would go down to 80. Which will be 10 plus 100 minus 30 will give me 80. And then later on I come and discover, this thing was overstated by 10. There's an error there of 10. So it means that my cost of sale, because closing stock is something that you're deducting, closing stock is something that you're deducting to arrive to cost of sales. Whenever it is overstated, it reduces my cost of sale. So once I realized that this was overstated by 10, It was overstated by 10. The very best way of correcting the error is to come and add the 10 to the cost of sales. And that is why, because we have said here we have something erroneous here, we have profit in our stocks. And because it is in the closing stock, it means that our cost of sale has been understated. Our cost of sale has been understated. So that is why we are always adding the UPS you found here, we are always adding it to the cost of sales. And gentlemen, the very best, if I were you, this is what I would do. I'll just cram here that UPS, add it to group cost of sales, subtract it from the group what here? Inventory, subtract it from the group inventory. You know, songs, even at my age, like I remember very well, there is a time some student, in this case here, passed AFR after really struggling with it for some time. And then the student, in this case here, came to RCM, they passed. So they thought maybe this Mwalimu now goes to like this local joint. So they called me to some joint. Actually, it was like 3 guys here. So we went to Quivers along Thika Road. I mean, that was amongst my worst days. Because number one, the music volume is too high. All right. I would always prefer places that are quite quiet. But when I was there, ladies and gentlemen, there are songs that I listened to. I may not even be able to remember what those songs were saying, but there were choruses that I picked that I'm able to remember up to date. One of them was quite a sad one. Mtu alikuwa anasema namna gani? Ngoja kidogo. Ati pesa niko nazo ni za babako, kasikie vibaya huko kwenu. Nilisoma vitu mingi sana hapo. Haya. Hata kama ni wimbo ya Gen Z, hapo nilisoma tons and tons. I mean, there's a big message there. And then I could imagine later on, like, for example, my son now, if, for example, I was a bad man, so now my son, in this case here, get somebody outside there, huyo anamwambia pesa natoka, anamwambia kwanza ni mjinga sana. Pesa hii tunakula ni baba. So, I mean, the concept is all of us should be able to know choruses. Like, you know, the chorus that I want to sell to you today, ladies and gentlemen, is that whenever you see UPS will always be added to group cost of sales. UPS should always be subtracted to the group's inventory in the statement of financial what year position, in the statement of financial, which I haven't yet shown to you. All right. So now from there, we take our calculators. Now we have finished all the workings. Now we take our calculators. And this is how we press. I don't have my calculator here. So now in your calculator, don't say equals in between. You simply say 100 plus 80 times 10 over 12 minus 3. Don't say equals, you only say equals at the end of it. So is there somebody who is able to give me this consolidated sales? Consolidated sales. Don't say equals in between. You say 100 plus 80 times 10 over 12. The students who like doing bad manners here, they say 100 plus 81, 80 times 10 over 12. In the calculator has got body mass well within it. So you say 100 plus 80 times 10 over 12 minus 3. You tell me what are you getting? Somebody here from Mumbai 163.67, 163.67. So ensure that you follow really your calculator body mass very well. If you don't press equals in between, the answer will always be correct. You simply say that in your calculator 100 plus 80 times 10 over 12 minus 3. So you're getting 163.6. How about the group cost of sales? Again, the same. Don't say equals in between, nowhere. You only say equals at the end of everything. So you say 20 plus 30 times 10 over 12 minus 3 plus 0.42, and then you give me an answer here. You give me an answer there. So according to Mombi, thank you so much. And the guys are really corroborating my evidence here. 42.4, like that. Then go ahead and give me gross profit. Go ahead and subtract here. Give me the gross profit, somebody. Go ahead and subtract to give me the gross profit. So you subtract here. You take this minus this. You give me the gross profit. Tell me what are we able to get here, ladies and gentlemen, my good students. What are we able to get here, ladies and gentlemen, my good students here? 121.25. So we have here 121.25. And then don't forget that we had expenses. So expenses here we have 35. plus 25 times 10 over 12. Don't say equals anywhere. You only say equals at the end of the day. 35 plus 25 times 10 over 12. Then this one here will end up giving me what figure? This one here will end up giving me what figure here, somebody? For expenses, the consolidated expenses. So according to Mombi, it's giving me 55.83. So 55.83. So you come here, ladies and gentlemen, and then you subtract, and then you'll be able to give us, what we call what here? Our net profit. No taxes. This was a simplified example. So net profit will be this gross profit minus expenses. Gross profit minus expenses. So 121.25 minus 55.83, which will give us 65.42. 65.42, and that is the answer. And that is the answer. That is the answer. That is the answer. So, ladies and gentlemen, what we shall do for us to be able to move pretty first, I will be able to come here. I'll be able to come here, ladies and gentlemen. I'll be able to come here, ladies and gentlemen. I will be able to come here, ladies and gentlemen, and send you some video, because now we have to tackle this thing. We must tackle this thing. So I'm sending you some video here to FR 6 p.m. group. Have you seen guys, some video that I've sent there? Have you seen guys, some video that I've sent there? Have you been able to see some video, some link that I've sent there? All right. So now these are the directions that I'm giving. You see, we have the consolidated income statement, and then we have the consolidated statement of financial position. So I can't do this any much in terms of consolidated statement of financial position demonstration here. What I would want us to do right away, you guys will take a 10 minutes break. After the 10 minutes break, I want all of us to start watching this video. We watch it from the beginning to the very end, so that in this particular day, this is a consolidations day, right? Then I'll be on your WhatsApp, in this case here, seeing how we are doing this question, all of us, up to 10 p.m. After that, now we shall be able to do most of your past paper questions on group consolidation. So that when we meet next time, which will be on Saturday at 6 p.m., we should be able to finish consolidation, and everybody will be happy. Once you get a group consolidation question, like 18 out of 20, then automatically you are sorted out. You will only come to meet me in advanced FR. So it has been a pleasure hosting you today. I hope, apart from wife lending money to the husband, etc., na niko na pesa mingi za babako na whatever, I hope you've got something to be proud about that you've been able to learn today. And my wishes are that all of us will start this particular discussion. Actually, this class, we have never started discussion. All my classes students really discuss. Yeah, I'm now going to be very keen, actually more keener with this class, because of course I'm introducing you to financial reporting. So I must give you even a better base. Otherwise, we're taking a 10 minutes break. After that, all of us will starting watching that video. I'll be there to see, like, for example, have we been able to know how to value net assets of a company? Do we know how to get goodwill of a company? After getting goodwill of a company, do we know how to compute, for example, NCI? I mean, it's a good video. It's a good area. We should be experts here. Right now in East Africa, we are having so many companies that are buying other companies, more companies here. So acquisitions, mergers and acquisitions becoming big, and you guys are going to become experts in this area. Otherwise, thank you so much. So after break, we shall be able to continue talking in our group there. Bye-bye. Bye. Great. Thank you so much. See you later.